It happened. The price that Silver Bears said was impossible, the level that mainstream analysts called a fantasy, the number that Wall Street dismissed as the fever dream of precious metals enthusiasts, 95.34. On Tuesday, January 20th, 2026, at 11:15 a.m. Eastern Time, silver exploded through 95 and printed a new all-time high that will be studied in financial textbooks for the next century. Not a gradual climb, not a grinding rally, an explosion. 6.54% in a single session. The largest single-day gain in modern silver market history, and it was triggered by something that nobody predicted: a frozen island in the Arctic, Greenland. President Donald Trump's ultimatum to Europe, sell us Greenland or face crushing tariffs, has done what decades of monetary policy, industrial demand, and supply deficits could not accomplish. It broke the paper market. It triggered a flight to safety so violent that the comics couldn't contain it. It sent silver screaming past every resistance level on the chart in a matter of hours. And as I record this video, we are not at the end of this move. We are at the beginning. Citigroup is now forecasting $100 silver within 3 months. Peter Schiff says $100 is just the floor. Macroeconomic strategist Tom Bradshaw is predicting $375 by 2028. $375. The mainstream financial media is scrambling to explain what happened. They're calling it a safe haven bid. They're attributing it to geopolitical uncertainty. They're missing the bigger picture. What happened on January 20th was not just a price spike. It was the moment the fiat currency system began to crack. It was the signal that the 50-year experiment with unbacked paper money is entering its terminal phase. And silver just told you the truth that central bankers have been hiding. Welcome to Chronicles of Currency. Silver has exploded to $95.34. The Greenland Tariff has triggered a historic squeeze, and the world will never be the same. Let me show you exactly what happened. I'm your host, and this is the channel where we decode the monetary signals that reshape the global financial system. We trace the patterns that the mainstream refuses to acknowledge. What I'm about to present is based on verified market data, official government announcements, and documented statements from analysts at major financial institutions. This is not speculation. This is history being written in real time. On January 20th, 2026, silver broke through $95 for the first time in history. The catalyst was President Trump's announcement of tariffs on 8 European nations, escalating from 10% to 25%, designed to pressure Europe into surrendering Greenland to the United States. The reaction was immediate and violent. European markets plunged. The dollar faced headwinds, and capital fled into the only assets that cannot be printed, manipulated, or seized by governments: gold and silver. In this video, I'm going to walk you through exactly what happened on January 20th. I'm going to explain why the Greenland tariffs triggered this historic move. I'm going to show you where prices are headed next, according to the world's top analysts. And I'm going to explain why this moment represents something far more significant than a single-day price spike. This is the beginning of a monetary regime change, and you need to understand what it means for your wealth. Let me walk you through exactly what happened in the early hours of January 20th, 2026, because the speed and violence of this move tells you everything about how fragile the financial system has become. The catalyst arrived on Saturday, January 18th. President Trump announced plans to impose 10% tariffs on 8 European countries: Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland. These tariffs would take effect on February 1st, 2026, but that was just the opening salvo. Trump announced that the tariffs would escalate to 25% by June 1st if Greenland was not sold to the United States. 25% tariffs on 8 of America's closest allies, as punishment for refusing to sell an island. The markets had the weekend to digest this news, and when trading opened on Monday, the reaction was swift. Spot gold surged nearly 2% to a record $4,690.79 per ounce during early trading hours. Silver followed, spiking 5% to set a new peak of $94.10. But the real move came on Tuesday. Silver opened with a bullish gap that left traders speechless. The white metal didn't climb, it teleported. $91, $92, $93, $94, and then at 11:15 a.m. Eastern Time, silver touched $95.34, a new all-time high, 6.54% gain in a single session. Let me put this in perspective. Silver has gained over 185% in the past year. 185%. An investment of $10,000 in silver 12 months ago is now worth $2,800. But more importantly, silver is outperforming gold on a percentage basis. The gold to silver ratio is collapsing as investors recognize that silver offers more upside in a monetary crisis. Nikos Tsabouras, senior market analyst at Tradu.com, captured the moment perfectly. Silver extends its record-breaking rally, supported by trade and geopolitical uncertainty as President Trump escalates his efforts to take control of Greenland. Michael Brown, senior research strategist at Pepperstone, characterized the trading as predictable, with European equities underperforming, havens such as gold in demand, and the dollar facing headwinds. But Marek Rogalski, lead analyst at BossFX, cut to the heart of the matter. Markets reacted schematically to new geopolitical tensions. Friction over Greenland has transitioned into economic warfare between the USA and the European Union. Economic warfare. Economic warfare. That phrase should send chills down your spine. The United States and the European Union are now in open economic conflict. The tariffs Trump announced are not negotiating tactics, they are weapons. And the casualties will be measured in collapsed trade, destroyed jobs, and shattered alliances. But for silver holders, this conflict is validation. When governments go to war, when alliances fracture, when the post-World War II order begins to crumble, there's only one asset class that protects wealth: hard money, gold and silver. The $95.34 print was not just a number on a screen. It was the market screaming that something fundamental has changed, that the stability we took for granted is gone, that the paper system is breaking. Peter Mellon-Jones, an analyst at Peel Hunt LLP, did not mince words. He called Trump's tariff threats reminiscent of a mafia extortion racket. And when mainstream analysts start comparing the President of the United States to organized crime, you know we have entered uncharted territory. And silver is pricing in that uncertainty in real time. Let me explain why Greenland triggered this historic squeeze and why the implications extend far beyond a single island. Greenland is not just real estate. It is a strategic asset of incalculable value. The island sits at the crossroads of Arctic shipping routes that are opening as climate change melts the ice. It hosts Thule Air Base, America's northernmost military installation. It contains mineral deposits that include rare earth elements, uranium, and critical metals essential for defense and technology. And it is not for sale. Denmark, which governs Greenland, has made this clear repeatedly. Greenland's prime minister has rejected the proposal. European leaders have dismissed it as absurd. But Trump is not taking no for an answer. The tariffs announced on Saturday are designed to inflict economic pain until Europe capitulates. 10% on February 1st, 25% on June 1st, and the implicit threat of more to come. The European response has been swift and unified. Hildegard Müller, president of the German Auto Industry Association, called for a smart, strategic response from Brussels, while warning that the costs of these additional tariffs would be enormous for German and European industry. Bertram Kaulath, president of the German Engineering Association, VDMA, urged the EU not to back down. If the EU gives in here, it will only encourage the US president to make the next ludicrous demand and threaten further tariffs. Volker Trier of the German Chamber of Commerce stated that highly controversial political goals are being tied to economic sanctions in an unacceptable manner. The stage is set for a transatlantic trade war. European leaders are meeting for an emergency summit in Brussels on Thursday to discuss counter tariffs on US exports that would hit everything from liquid gas to aircraft and machinery. This is not posturing. This is escalation. And the precious metals market understands exactly what it means. When the world's two largest economic blocs go to war, there is no safe harbor in paper assets. Stocks can crash, bonds can default, currencies can be devalued, but gold and silver cannot be printed into oblivion. The flight to safety that drove silver to $95.34 is not irrational panic. It is rational self-preservation. Investors are recognizing that the geopolitical stability that has underpinned global markets for 80 years is crumbling, and they are positioning accordingly. Maria Agustina Patti, financial market strategist at Exness, explained, "The announcement unsettled European markets and prompted discussions among EU nations over potential retaliatory measures." Unsettled is an understatement. European equities plunged, the euro weakened, capital fled the continent, and where did it go? Into gold, into silver, into the only assets that have protected wealth through every war, every crisis, and every monetary collapse in human history. The Greenland Tariff is not just about an island. It is about the breakdown of the international order. It is about the end of the post-Cold War consensus. It is about the recognition that we are entering a new era of great power competition where economic weapons replace diplomatic negotiations. Silver at 95.34 is the market's verdict on this new reality, and we are just getting started. Let me show you how the world's largest financial institutions are responding to this historic move. Evidence 1, Citigroup's $100 forecast. Last week, before the Greenland tariffs were even announced, Citigroup forecast that gold would reach $5,000 within 3 months and that silver would break 100 per ounce, $100. With silver now at $95.34, the target is less than 5% away. Citi's analysts see the supply deficits deepening and safe haven demand accelerating. Their forecast, which seemed aggressive a week ago, now looks conservative. Evidence 2, Goldman Sachs' $4,900 target. Goldman Sachs forecasts gold reaching approximately $4,900 per ounce by the end of 2026, driven by continued central bank purchases and Fed rate cuts. With gold already above $4,700, Goldman's year-end target could be achieved in weeks, not months. Evidence 3, JP Morgan's highest conviction call. JP Morgan Chase has called gold their highest conviction long bet, predicting an average price of $5,055 in Q4 2026, with potential peaks reaching $5,200 to $5,300 per ounce. JP Morgan cited strong central bank buying, with demand exceeding 566 tons per quarter, and persistent inflation as the key drivers. Evidence 4, Bank of America $5,000 upgrade. Bank of America raised its 2026 gold price forecast to $5,000. Evidence 5, ETF inflows explosion. Exchange-traded fund gold holdings jumped by more than 28 tons last week, the biggest increase since September. Holdings have expanded in 7 of the last 8 weeks, according to Bloomberg. The institutional money is not just talking about gold, they are buying it. Evidence? 6. CME margin system overhaul. The surge in precious metals volatility has forced infrastructure changes across the market. CME Group switched its margin system for gold, silver, platinum, and palladium futures from fixed dollar amounts to percentage-based requirements. When the exchange has to change its margin methodology to handle volatility, you know the market has entered a new phase. Evidence. 7. Trading volume records. Crypto exchange. BingX reported its traditional finance trading product surpassed $1 billion in 24-hour volume, with gold futures contracts alone generating over $500 million as prices tested record highs. Liquidity provider. Scope Prime adjusted spreads in response to sustained price increases. The infrastructure of global finance is being reshaped by this precious metals rally. 7 institutional data points. Citigroup forecasts, Goldman targets, JP Morgan conviction calls, Bank of America upgrades, ETF inflows, margin system changes, and volume records, all confirming the same conclusion. This is not a temporary spike. This is a structural repricing of precious metals that the largest institutions in the world are positioning for, and they see much higher prices ahead. Let me walk you through the price targets that the world's top analysts are now projecting. Near-term target, $100. The psychological $100 level is now less than 5% away. Multiple analysts expect this milestone to be reached within weeks, not months. Peter Schiff, economist and founder of Schiff Gold, states bluntly, "I think 100 is a very realistic target for silver in 2026. It could end up being quite a bit north of that." Schiff urged investors, do not wait for a pullback, emphasizing that silver's breakout has established a new floor. Gold Silver's lead analyst Alan Hibbard expects silver to trade above $100 in 2026 as supply deficits deepen and industrial demand accelerates. 2026, target $200. DeVere. Group analysts project silver could reach $200 per troy ounce by the end of 2026. Robert Kiyosaki, author of Rich Dad, Poor Dad, predicts silver will potentially reach $200 by 2026, emphasizing silver as the best and the safest investment amid what he calls the biggest crash in world history. Mike Maloney, precious metals expert at Gold Silver, made his boldest prediction yet. I'm betting on at least $200 an ounce, but we could see a spike that goes up toward quadruple digits. $1,000 silver. Maloney argues that silver, when adjusted for true inflation, would need to reach $200 just to match its previous inflation-adjusted highs. 2028, extreme target, $375. Macroeconomic strategist Tom Bradshaw delivered the most stunning forecast in an interview with Daniela Cambone on ITM Trading. $375 per ounce by 2028. $375. Let me explain Bradshaw's reasoning because it goes far beyond technical analysis. When gold changes its value by 38% or more in a year, the American economy experienced serious economic crises, Bradshaw explained. Gold has reached this threshold in 11 of the last 15 months. Recession may therefore be inevitable if it's not already underway. Bradshaw cited historical patterns from the 1973-75 recession, the double recession of the early 1980s, the 2008 crisis, and the European debt crisis of 2010-2011. This is a classic signal of deflationary, not inflationary slowdown. Gold doesn't tell us about hyperinflation, only about economic cooling and a sharp drop in confidence in debt. But here's the critical insight. We are very early in this bull market. I expect a 40-45% correction, then a return to growth, and finally, silver reaching around $375 per ounce in 2028. Bradshaw warns that the precious metals rally signals not prosperity, but alarm that the fiat currency system is under enormous pressure. The 45-year breakout. According to Bradshaw, the silver market has broken a 45-year cup and handle formation, opening the way for a move that will dwarf anything we have seen. In 2025, gold outperformed the S&P 500 by 49% and silver by 132%. A rotation of capital from the stock market to metals seen only 4 times in history: 1931, 1971, 2002, and now. The Great Depression. The end of the gold standard. The dot-com crash. And now. We are living through a monetary inflection point that happens once in a generation. The price targets, $100, $200, $375, these are not fantasy. They are the mathematical consequence of a fiat currency system in terminal decline. Now, let me explain what the mainstream financial media is not telling you about this historic move. They are framing the $95 silver as a geopolitical reaction. They are missing the structural reality. The Greenland tariffs did not create the conditions for this rally. They merely triggered the release of pressure that has been building for years. Here is what they are hiding. Hidden truth 1. The supply deficit is permanent. The silver market has been in structural deficit for 3 consecutive years. Demand exceeds supply by over 120 million ounces annually. Above-ground stockpiles are depleting, and there's no new supply coming. Nikos Tsibouris explains, the metal is essential to the AI boom and the build-out of data centers, the clean energy transition, and the defense industry amid rising military budgets. Industrial demand is not discretionary. Solar panel manufacturers need silver. AI data centers need silver. Defense contractors need silver. They will pay whatever price the market demands. Hidden truth. 2. Central banks are hoarding. As Tsibouris notes, silver can rise more than gold this year, especially since the growth parity hasn't been filled yet, and governments haven't stockpiled silver like they have with gold. Central banks have been accumulating gold at a pace not seen since the 1960s. Now they are turning to silver. The metal that was once dismissed as poor man's gold is being recognized as a strategic asset. Hidden truth 3. The dollar is dying. Peter Mallon-Jones called it plainly. The precious metals rally is a reaction to a move away from U.S. dollar assets and the potential inflationary impact of a trade war between the U.S. and EU. The world is de-dollarizing. China, Russia, the BRICS nations, they are all reducing dollar holdings. They are accumulating gold. They are building alternative payment systems. The Greenland tariffs accelerate this process. When the United States weaponizes trade against its own allies, it undermines the trust that supports dollar hegemony. Hidden truth 4. The fiat system is breaking. Tom Bradshaw said it most clearly. The precious metals rally signals not prosperity, but alarm that the fiat currency system is under enormous pressure. This is not a temporary crisis. This is the beginning of the end of the 50-year experiment with unbacked paper money. The Bretton Woods system died in 1971. Its replacement, the petrodollar system, is now dying. What comes next is uncertain. But one thing is clear. Gold and silver will be part of whatever monetary system emerges, and those who hold physical metal will be protected, while those holding paper promises watch their wealth evaporate. The mainstream will not tell you this. They cannot tell you this, because if the public understood what is happening, the rush into precious metals would crash the entire paper financial system overnight. Now you understand. Let me project what unfolds over the coming days, weeks, and months. Immediate term, next 72 hours. European leaders meet for an emergency summit in Brussels on Thursday to discuss counter-tariffs on U.S. exports effective February 7th. The counter-tariffs being discussed would hit American liquid gas, aircraft machinery, and other key exports. If Europe announces retaliation, expect another surge in precious metals as the trade war escalates. Silver could break $100 within days if the diplomatic situation deteriorates. Near term, February 1st. Trump's 10% tariffs on 8 European nations take effect. European manufacturers have been scrambling to ship products to the U.S. before the deadline. As one UK automotive executive admitted, "We did not see that one coming." The tariffs will immediately impact trade flows. European exporters will see margins collapse. Some will exit the U.S. market entirely. The uncertainty will drive continued safe haven buying of gold and silver. Medium term, June 1st. If Greenland is not sold, tariffs escalate to 25%. This is the point of maximum pressure. Either Europe capitulates, which seems unlikely, or the trade war becomes permanent. A permanent 25% tariff on European exports would reshape global trade patterns for a generation. Gold and silver would continue their ascent as the global trading system fragments. Long term, 2026, 2028. Tom Bradshaw's framework projects a 40–45% correction at some point, followed by resumption of the bull market toward $375 silver. This correction, if it comes, will be a buying opportunity of historic proportions. Do not be shaken out by volatility. The structural drivers, supply deficits, industrial demand, de-dollarization, fiat system stress, these do not disappear during corrections. They intensify. The wild card, recession. Bradshaw warns that gold's behavior is signaling an imminent recession. Gold has reached the 38% threshold in 11 of the last 15 months. Recession may therefore be inevitable if it's not already underway. A recession would initially cause all assets to decline, but precious metals would recover faster and stronger as central banks respond with money printing. The 2008 pattern. Gold dipped initially, then tripled over the next 3 years. The same pattern is likely this time, but with even more dramatic upside, given the structural supply constraints. The path to $370 will not be smooth, but the destination is increasingly certain. If you have been stacking silver, if you held through the years of suppression and ridicule, if you accumulated while the mainstream dismissed precious metals as relics, January 20th, 2026 is your vindication. $95.34, a new all-time high, 185% gains in 12 months. Every ounce you bought at $20, at $25, at $30 is now worth $95. But this is not the time to celebrate. This is the time to understand what this moment means. The precious metals rally is not signaling prosperity, it is signaling crisis. Tom Bradshaw's warning should echo in your mind. The fiat currency system is under enormous pressure. You recognized this before the mainstream. You understood that paper money is an experiment. You understood that the experiment would eventually fail. You understood that when it failed, only hard money would protect wealth. And you acted on that understanding. The $95 price is your reward, but the real reward lies ahead. $100, $200, $375. These prices are not fantasies. They are the projections of the world's top analysts based on the structural realities of supply deficits, industrial demand, and monetary system stress. You are positioned for what comes next. The stackers who held through the doubt, through the mockery, through the years when silver was called a pet rock, they are being vindicated in real time. Hold your position. Add on any corrections. The greatest wealth transfer in history is underway, and you are on the right side. Let me give you a specific action plan for the coming weeks and months. Priority 1. Do not sell into this rally. Peter Schiff's advice is critical. Do not wait for a pullback. Silver's breakout above $95 has established a new floor. Selling now to lock in gains would be selling at the beginning of the move, not the end. $100 is less than 5% away. $200 is the consensus 2026 target. $375 is the 2028 projection. Selling at $95 would be leaving generational wealth on the table. Priority 2. Add on any correction. If Bradshaw is right about a 40–45% correction at some point, that would take silver back to the $52 to $57 range. That correction, if it comes, would be the buying opportunity of a lifetime. Do not panic if volatility increases. Use it to accumulate. Priority 3, diversify your precious metals. Holdings. Physical silver should be your foundation. Coins and bars from reputable dealers, stored securely. Consider adding gold to balance your portfolio. Gold is less volatile and provides stability during silver corrections. Mining stocks offer leveraged exposure to metal prices, but they carry operational and jurisdictional risk. Size positions accordingly. Priority 4. Watch the technical levels. According to verified technical analysis, key silver support levels are immediate support, $93.50, previous week's highs. Support zone 1, 84 SAT dollars, December 29th, highs. Support zone 2, 72, $68, large price accumulation. Major support, $54–47, October-November range, 200 EMA. Psychological level, $50. As long as silver holds above $50, the structural bull market remains intact. Priority 5. Monitor geopolitical developments. Watch the Brussels summit on Thursday. Watch for European counter-tariff announcements. Watch for any escalation or de-escalation in the Greenland standoff. Each development will move precious metals prices. Priority 6. Ignore the mainstream media. When silver corrects, the mainstream will declare the rally over. When volatility spikes, they will call it a bubble. When prices consolidate, they will say you should have sold. They were wrong when silver was $20. They were wrong when silver was $50. They are wrong now. Follow the fundamentals, not the headlines. The supply deficit is real. The industrial demand is real. The fiat currency stress is real. The price trajectory is clear. Let me leave you with this. On January 20th, 2026, silver touched 95.34 per ounce, a new all-time high, a 185% gain in 12 months, a historic squeeze triggered by President Trump's Greenland tariffs. But this moment is about far more than a single day's price action. This moment is about the recognition that the fiat currency system is breaking. This moment is about the flight to hard money that will accelerate as the crisis deepens. This moment is about the validation of everyone who understood that paper promises eventually return to their intrinsic value. Zero. Tom Bradshaw, his warning should be seared into your memory. The precious metals rally signals not prosperity, but alarm that the fiat currency system is under enormous pressure. We are living through a monetary inflection point. The post-World War II order is crumbling. The transatlantic alliance is fracturing. Economic warfare has replaced diplomacy. And gold and silver are telling the truth that central bankers cannot hide. $100 silver is coming within weeks. $200 silver is the consensus 2026 target. $375 silver by 2028 is Tom Bradshaw's projection. These numbers seemed impossible a year ago. They do not seem impossible anymore. The historic squeeze has begun. The Greenland Tariff was the trigger. But the underlying cause is the terminal decline of the fiat currency experiment. Position yourself accordingly. Hold your silver, add on corrections, ignore the mainstream, and watch history unfold. This is Chronicles of Currency. Silver has exploded to $95.34. The squeeze is just beginning. I'll see you on the other side. If this analysis was valuable, subscribe and hit the notification bell. I'll be tracking this historic squeeze and providing updates as the Greenland crisis unfolds. Drop a comment. Where do you see silver by the end of 2026? Are you adding to your position? Share this video with someone who needs to understand what January 20th, 2026 means for the future of money. The historic squeeze is here. $100 is next. Chronicles of Currency, out.